What's up, everyone? It's Caddy with MoneyVest, and markets here doing what they do best, selling off aggressively with the Nasdaq here down a little bit over 1.8%. We had the S&P 500 down over 1.64%, just a little bit over 4,300, and the Dow Jones tumbling almost 400 points on the day, with the 10-year yield crossing over 4.5% for the first time since 2007. So we have talked about a lot of different reasons as to why this is happening. I have done a lot of detailed videos on the macro sort of thesis and why markets are showing signs of weakness from a technical perspective. Make sure that you do check out those videos, because otherwise, you're going to be disengaged with what's going on with the market, right? You want to understand why this is happening, and you want to be ready for when we want to take advantage of opportunities, right? And I'm going to start to get more and more excited, because as markets come down, risk comes down with it, and stocks are now starting to trade. Not yet, but they are going to start trading at attractive levels once again, right? We've got AMD under $100, NVDA now low 400s once again, Meta's selling off. We got Apple, Microsoft, Google, a lot of big tech, Tesla, a lot of them are selling off. I mean, entire heat map is very, very red. I'll go over that in just a minute, but hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. I would really appreciate it. And link to our Discord and Patreon is going to be down below. There's 8 days left if you want to take advantage of that 16% annual discount, and of course, be a part of our MoneyVest community. I did open up a few more spots. There's only a couple more left in September if you want to take advantage of that. And I definitely want to encourage everyone to at least check out these videos that I've posted literally in the last day. This right here going specifically over the bond market. And we also talk about how the 10-year yield is hitting highs and how patience and discipline is going to be very, very important. So I break down everything you need to know. We also talk about what Jerome Powell specifically said about the treasury yields going higher. And this is perhaps the most important video with respect to why I believe the Federal Reserve is not going to be that motivated in cutting rates, and what needs to happen in order for the Federal Reserve to cut rates. So this basically goes over the reality check of the market, and Fed won't cut rates until this particular thing happens, right? One of two things happens, and this video basically goes over that. So highly encourage you guys to check out, because it's gonna literally just put you in the right page, right mindset, of course, understanding of the fact that it's not that easy from a macro perspective. And of course, the Federal Reserve is what's driving this move lower with respect to the market after the FOMC, which again, we broke down. We had a live stream, we broke down the speech, we broke down the SCP. Everything is on the channel, so do definitely check out those videos. So Dow tumbles more than 300 points to notch the third day of losses amid fears of higher rates and government shutdown. So 10-year treasury yields also hits its highest level since 2007 as jobless claims decline. So we're starting to see a little bit of that break in the unemployment. Those are some early signs. And as I mentioned before, unemployment is the most important and the first marker for every economy. If unemployment starts to break apart, then everything will ripple into some of the other parts of the economy with respect to economic growth, with respect to hiring, with respect to earnings, with respect to interest rates, inflation, everything, recession, everything starts with the unemployment rate. And right now we're starting to see it creep up slowly and steadily. And I think the Federal Reserve would welcome that very much. But I think the bigger problem is going to be whether inflation comes down fast enough on the back of unemployment rate going higher, because the worst position the Federal Reserve could put themselves to be in would be a higher level of unemployment and a higher level of inflation, because at that point they're fighting against their dual mandate. They don't know what to do. That would be a big dilemma for the Federal Reserve. So it's just that we need to get down with inflation at under 2% before unemployment starts to push higher with the lag effects. And lag effects are only going to get started in the fourth quarter of 2023. They haven't even started yet. With all the 500 basis points the Federal Reserve has done, we haven't even started with the lag effects. So it's only going to get started. It's only the beginning. This right here, Wall Street's quote, meh response to tech IPO shows Silicon Valley's valuation problem. And this has been going on for quite some time. And I don't think that So this basically mentions that ARM, Instacart are all trading near their IPO price, showing a lack of enthusiasm among public investors for new tech opportunities. And I disagree. I don't think it's a lack of enthusiasm among public investors, but it's just the understanding. It's the more knowledge of the BS that private markets pull on public markets, and that is the valuation problem, which is obviously the headline of this article, because there's no way ARM should be trading at 20 times sales or trading at over 40 to 50 times earnings. There's this, I mean, you have to understand that the public markets are starting to become more and more understanding and of course more knowledgeable with respect to the valuations. And we look at the charts, right? We understand that there's not a single company except for two. There's only two companies in the last 2 years that have IPO'd that are now trading above their IPO price, Airbnb and Snowflake. Everything else is down. Everything else is down, right? So there's no opportunity in those IPOs unless the valuation's right. And that it all comes down to valuations, folks. It always does, right? As I try to preach on this channel as much as I have, and it may sound like, repetitive, but valuations are extremely important. You can buy a great company at a bad valuation, you're still not going to make money. It's always about finding great companies at great valuations. That's how big money is made, right? You can even find a bad company, but if you find it at an excellent valuation, like really, really cheap, you might still come out on top and make money versus a person who invests in a great company at a really bad valuation. If you overpay, it doesn't matter what you're buying, you're not going to be able to make money because valuation is the price paid determines your future returns, right? And that all comes down to valuations. Now, Cisco acquires Splunk for $28 billion. This is probably maybe something that we would talk about in another video, but the pros, including Jim Cramer, discussed an all-cash deal as Splunk's stock rocketed more than 20% following the announcement that Cisco will acquire for $157 per share, or close to $28 billion. So maybe I can do a video on this later today, basically going over what this deal is going to look like for both Cisco and for Splunk and for shareholders as well. So this is where we are with interest rates, and something that I've already mentioned in my previous videos. This is what the market's pricing in. So we just need to shift one column to the right to better be aligned with the Fed's expectations of interest rates, which is going to be closer to 5.5 to 5.75%, and 2 rate cuts priced in for 2024. I specifically mentioned again in our previous videos that if there are fewer cuts in the FOMC's SEP, that's going to lead to a bearish outcome, and that's exactly what we have witnessed over the last couple of days. The markets have just been selling off pretty aggressively, and boy, oh boy, does the heat map look like Christmas is here early. We got Google down over 2.4%, Amazon down 4.4%, Tesla down 2.6%, NVDA down almost 3%, Broadcom, AMD down over 4%, Apple, Microsoft kind of holding up their ground a little bit better, but Oracle, Adobe down 3 to 4% each respectively, Palo Alto Network, the entire financial sector, industrial, real estate, healthcare, defensive, energy, materials, utilities. It was selling across the board, except for healthcare that kind of held up a little bit better. So we did have UNH, we did have CVS. So those were companies that were slightly higher on the day, but everything else was straight up red. So this is the entire market. These are all the sectors, all 11 sectors. Not a single sector was not down. And to make matters worse, every single sector was down at least over 1%, if not more. Like real estate down 3.4%, cyclicals down 2.6%, materials down 2.3%. So every sector in the S&P 500, all 11, are down on the day, down on the week. And guess what? September is playing out exactly as expected. I did a video on basically at the beginning of this month or end of last month, end of August here, and we talked about how seasonality obviously is going to kick in, and there is possibilities for us to see some more downside. And well, guess what? S&P and NASDAQ are down on the month here. You got platinum, natural gas, palladium pushing higher on the day, with coffee, lean hogs, feeder cattle, live cattle, rough rice, orange juice all selling off. Bitcoin a little bit over 26,500 and Ether back under 1,600 as well. So this right here is going to be the NASDAQ. In the month of September, we're down over 5.7%. Not a surprise. September is here. September has been going on, and I've talked about the seasonality aspect of this month. And S&P 500 down almost 4%, and the Dow Jones is also red down a little bit over 1.88%. So of course, NASDAQ and tech down a lot more than the value-oriented Dow Jones. Going over to volatility, it was up over 15, almost 16%, getting up to over 17.5. So a huge spike in the volatility. 18.6 is going to be that next level to watch, all the way up to 20, which is also where we have previously gotten up to, and then of course got rejected and sold right back off, right? So those are going to be some levels to watch for the VIX, but massive increase, right? Almost a 16% spike in volatility. Crude oil is starting to moderate a little bit, so we did get a bit of a rejection at $93, $92 per barrel. So we saw that small pullback in crude, and now we're back over $90 a barrel. So that obviously, the more persistent oil prices are higher, energy prices are higher, the bigger the problem is going to be. As Jerome Powell also mentioned that, the reason why energy prices are not included in their estimates of where inflation really is, because of the fact that it's so volatile. It just goes up and down very, very quickly. But he mentioned that if energy prices stay higher for longer, that's obviously going to be detrimental to the consumer's expectation of inflation. So that's something to keep in mind, because if energy prices stay higher for longer, obviously that's going to start playing a bigger role in overall inflation, and not to mention the expectations of inflation, because inflation at the end of the day is very much a self-fulfilling prophecy, right? If you believe it's going to be higher, it is going to be higher. If you believe it's going to be lower, it is going to be lower, because you are going to act and behave in certain ways that's going to make inflation go where you believe it's going to go, right? So it's like, if you expect prices to be higher, well, guess what? You're going to buy today and forego future spending. And if everybody starts thinking that way, well, demand's going to come in and prices are indeed going to be higher. And on the contrary, if you believe prices are going to be lower, guess what? You're going to hold back. You're going to be like, you know what? I'm going to buy when prices are lower. If many people do that, demand starts to go away and prices indeed are going to be lower. They start to come down. So it is very much dependent on consumer expectations. Keep a close eye on energy, of course. We got Bitcoin here, just a little bit of a pullback, 26,582. Support level is going to stay put at 25,000. Resistance all the way up to 28,000. And Ether here, on the other hand, is also now selling off once again back under 1,600, trading down below that support. And resistance is going to stay put at 1,700 right now. Talking about the yields, which I think is going to be very, very important topic of conversation, 4.5%, right? So we continue to see momentum in the treasury market. We've got the 1 year sitting at almost 5.5% now. 6 month already past 5.5%. 3 month is almost at 5.5%. 2 year is over 5%. And of course, the 10 year, the most prominent treasury yield of all, 4.5%, levels we haven't seen since 2007. So this is the huge spike in the treasury yield. And again, I did a video, I talked about this very much in this video right here. So please do yourself a favor if you want to understand what's going on, and better prepare yourself with TLT, TMF, and understand that macro tactical play. This is the video to watch. I'll give you a far more understanding of, what the treasury yields are doing, why they're doing what they're doing, and what is potentially going to happen. So, going over to S&P 500 now. This is the overall chart. As we talked about in, again, one of our previous videos, we talked about the lower high and the lower low. Well, guess what? It doesn't look good, folks. I'm going to be honest. I'm going to be very honest, and I know that people don't want to hear this, and I do get a lot of negativity in the comments when I am bearish, or not really bearish, but I'm kind of suggesting that there is more potential downside. But you guys come here for my honest, objective analysis, and I try to be as unbiased as possible. But the bottom line is that this is a trend, right? I'm not making these things up. This is a technical chart. This is real people trading real money, and everything is displayed on the technical charts. And you can see that we are weak. We are making lower highs and lower lows. The last couple of days have not been great. I mean, the bears have full control over the price action, with the fact that we are selling off so much and so aggressively. Goes to show that the demand is starting to stall, and we are starting to see some breakdowns here below 43.35. And if I were to really be very, very strict with these prices, we did go lower. That's the bottom line. We did go lower than where we were back on August 18th. August 18th low was 43.35. We're sitting at 43.30, so we're 5 points lower than where we were back in August, not to mention where we were back in July. So we are making lower lows. That's the unfortunate situation. And this is the overall technical trend of that downtrend, right, of lower highs and lower lows. And a lot of this is happening on the back of a lot of these big tech companies, which we have gone over. I'm going to go over them very briefly, but we've talked about there are signs of weakness, right? This has been brewing for some weeks now, that they've been making these lower highs and lower lows. And you can see the downtrending channel on the S&P. The NASDAQ is the same thing. down a little bit over 1.8%. It's not quite breached its August low, but it's definitely, coming down to that level. So still very much in that downtrend, lower highs and lower lows. So you can see the lower highs over here, lower lows over here, and support level right now is sitting at 13,100. That's more of a horizontal support. But of course, if you do end up breaking down below this, then that's a lower low for the NASDAQ. And that definitely does suggest, unfortunately, more potential downside. I'm going to call this downside as opportunities, right? More potential opportunities in the future, so that it kind of changes the wording a little bit better. So it's not really as brutal when you hear it that the market's going to sell off, but instead when you hear markets are going to give you the opportunities if they continue to pull back and sell off. So 13,100 is going to be the level to watch. On the other hand, Apple here, still very much in the context of this downtrend. So we talked about this, lower highs and lower lows. And again, if you go back on the chart, what you'll notice is a very simple breakdown of the trend, the overall trend and the direction of the pattern. And this right here was the lower highs and lower lows. This ended up being a reversal for Apple's direction. Of course, we started selling off. This right here was a green flag, Apple showing signs of strength, higher highs, higher lows. Then we trade in this very, very tight range of this uptrend. And now more recently, we are once again witnessing something that we have already seen before, which is lower highs and lower lows and signs of weakness from the price action itself. Talking about Amazon, unfortunately, Amazon also breaks down. I mentioned this in my yesterday's market update video, where Amazon and Google, the two companies that were in an uptrend for a very long time, are finally starting to show signs of weakness, and they are selling off. Well, guess what? Amazon has done that. Not only has it broken down below this higher low, well, unfortunately, it is now starting to make lower lows, and there will potentially be a lower high in this potential sequence for Amazon as well. So we are, really gapping down. We're aggressively selling off, down over 4.4%. So this right here is going to be that lower low potentially, and the next support is going to be sitting all the way down to 126. So maybe another $3 drop here for Amazon that is possible. Talking a little bit about Tesla. And Tesla here on the day down over 2.6%. So selling off quite aggressively. So Tesla's chart is actually going to be much better over here. And what you'll notice is that we were taking staircases up. We were consolidating sideways, then pushing higher, then consolidating sideways, pushing higher. But right now we have broken down below that $260 level. In fact, that level actually acted as a resistance today. So you can see the high for the day, 260.86. And right now we're very much, in the context of this downtrend. So lower highs and lower lows. As you can see, this is the lower low, this is the lower high, and that next support, unfortunately, is going to be sub 200. But we've got a lot of support sitting on the way down there. So we've got a big support sitting in low 200s, lots of demand there. We've bounced off of that level several times in the past, which is also a previous resistance. So, of course, time will tell whether we trade below $200 or if Tesla is going to get bought up at those demand levels at roughly 240s down to low 200s. So those are going to be a couple of support levels to watch. Talking about NVIDIA. And NVIDIA, we talked about how it is also starting to break down from this higher low. So as unfortunate as it is, NVIDIA low 400s is a possibility. So we've got NVIDIA, $400. That's going to be that next support level to watch. In the month of September, NVIDIA is down almost 17%. So NVIDIA, after 1, 2, 3, 4, 5, 6, 7, 8, after 8 consistent months of green, this is finally the first month in 8 months that NVIDIA is down. And I think it's appropriate considering the RSI MACD was overbought on a monthly time frame. We've been talking about valuations for quite some time, so it's not a surprise that NVIDIA obviously is now starting to roll over, and low 400s are going to be the level to watch. So this right here, very, very important level of support. And also don't forget, we've got gaps all the way down in the 320s and 350s for NVIDIA. Talking about advanced micro devices, so there we go, a breakdown which was a long time coming for advanced micro devices, sub $100. So this right here were the lower highs and the lower lows, breaking down. That's good. Low 80s is going to be the level to watch for AMD, and that's going to be that support to pay attention to for advanced micro devices. And that's exactly where I would be interested in dollar cost averaging a lot heavily. And of course, we'll be looking at selling cash to good puts now for AMD. We'll be looking at put options. And again, if you want to get access to all these alerts, right, I'll be selling a lot of puts on a lot of these stocks that are coming down. So a lot of options trading and, of course, a lot of straight up buying and dollar cost averaging as well. All those alerts are going to be available in our Discord. So you're more than welcome to join with the link down below. So AMD low $80 is going to be that level. Talking a little bit about PayPal here. PayPal selling off quite aggressively on the day. So selling off over 3.6%. So not a surprise. Next support is going to be down in the $57, $50 range. definitely kind of in line with the market, in line with its peers, selling off quite aggressively. We've got a huge gaps and of course resistance sitting all the way up to $69 to $70 per share for PayPal, but support level is going to stay put at $57, $58 per share for this company. Talking about Square, and Square also starting to break down pretty aggressively, as I've already mentioned, as unfortunate as it really is. Next support is going to be at $34 to $35. Very, very oversold on the RSI and the MACD. I do think that there might be buyers that step in a little bit before we actually get down there. So if I were to point out a second support, I would be looking at $42. So this right here would be another support here because we validated that level in the past year. Even during the pandemic, we came down to that support and then validated and pushed right back up. So that would be a more intermediate next support level to watch on Block. And that's going to be $42 all the way down to $34 on Square. Talking about Meta platforms, and Meta here also in a very similar trajectory of lower highs and lower lows, although it wasn't down as much as some of the other companies, but still down 1.3%, trading back under $300. So that's the lower high. This is the lower low. Next support is going to be down to 275. That's going to be the level to watch. And of course, we've got a lot of gaps to fill on Meta as well in the 220s and in the 160s for Meta platforms. Talking about Netflix, and Netflix here sells off another 0.5%, so definitely breaking down below that support that we talked about, and not to mention that old support is now acting as a huge resistance for Netflix. And this is going to be that green rectangle, which is where the next support and that area of demand is going to be for Netflix. So that's going to be sitting roughly in the low 370s, mid 370s, and of course 360s for Netflix. So that's going to be that area of demand for Netflix. Now, we talked about Google, and Google also was very similar to Amazon. It's starting to break down from its trend, overall uptrend, which is what I was really concerned about and afraid of. So we're starting to see that sell off. And guess what? I was able to sell Google and take profits with my call that expired in the money at 135, and including the premium, I was able to capture 137, and it topped out at 139. So again, options are incredible ways to generate not only passive income, but also be able to lock in profits when the stock price is going higher. And I cannot believe how precise that thing ended up being. Last week, September 15th, is when my call option expired. And of course, since that 137 price from last week, Google is down over 5%. And it's going to give me the opportunity to, once again, dollar cost average at lower levels. If it does end up dropping below 120s, 100s, or even sub 90s, I would love to dollar cost average at those levels, right? Of course, patience is going to be the key here, but next support is going to be down to 126. So this right here is going to be that level to watch. And of course, we are starting to break down below that support right now. And Google is definitely showing signs of some weakness with this overall pattern starting to break down. Talking about Microsoft. And Microsoft continues this lower high and lower low pattern, something that we have talked about in our previous videos. So next support really is going to be down to as low as $311. So this is going to be the one to watch for Microsoft. And right now, very much in a downtrend, showing signs of weakness, as unfortunate as it is. Talking about Enphase, one of my favorite companies, actually outperforming on the day again today. So pushing higher, over 70 basis points. And again, I've been buying dollar cost averaging a little bit in Enphase. Next resistance is going to be a 128. Definitely, goes to show that it may have bottomed, but again, I don't like to make those predictions. But like I said, this is a good deal area. We dipped inside this green rectangle for some time. We've had buyers step in at the same exact level for many, many times in the past. So it is possible that we do see some more upside potential. But even if it does sell off in the low 100s, I'd be happy to dollar cost average a little bit more. And resistance is going to stay put at 128 all the way up to 151 for Enphase. And finally, we got Shopify. Shopify here definitely selling off quite aggressively. So this right here was at support at $54. Seems like we're starting to break down below this level here. And unfortunately, we do have some gaps that Shopify needs to fill over here. That's going to be a potential gap that it left after the earnings. I could see it come down to low 50s, possibly sub 50s as well. And of course, down to as low as $41, $42. That's going to be that next important support for Shopify. So bottom line is, a lot has happened in the last 48 hours. We already knew the September seasonality. We knew the FOMC. We knew what was going to kickstart this sell-off with respect to 2023-2024 guidance. And that's, what's basically playing out in the market. So definitely do check out these videos. If you have any questions, feel free to reach out. Hope you guys enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel, and get your cash ready, folks. Get your dry powder ready. Have some money on the sidelines. ready for opportunities and ready for deals, and we're going to be ready to buy and sell some puts. So happy investing. I'll see you all in the next video.